Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is Thursday, April 20th. Big drop in AT&T today. We're going to take a look. This is out of the communications sector. This will be the last stock pick of the day video for the week. It is Thursday. I don't typically do them on Fridays, but tune back in on Sunday for my portfolio update. You'll see all the activity in my portfolio for the week, and we'll see you in that one. But right now, let's jump in and take a look at AT&T. And I've been starting all these videos off with my investing criteria. This on a high level is how I take a look at a company and their stock and see if it is one that I am interested in doing a deeper dive. It's also how I go through my portfolio to see if the positions within the portfolio still meet my investing criteria. You can take a look at this, stop it here and read through this. For me to be able to do a deeper dive, it must meet at least 4 of the 7 criteria laid out above. If it's not a financial company, if it is a financial company, it must meet 5 of the 8. All right, I'll let you read through that at your leisure. Now let's jump in back to AT&T. You can check them out at their homepage, www.att.com. That is where I pulled this information from. And what is AT&T? They're a communications company out of the communications sector, right? Been around for a long time. They sell phones, internet access, wireless, internet, TV, prepaid bundles, right? Fiber internet access. Looks like they're giving away some free phones to try to get you to sign up for their cell phone service, right? So that's who they are. You're probably well aware of them. I mean, unless you've been living under a rock, AT&T, just like Verizon, has been around for a long time, and a lot of people use them for their cell phone service. And the reason we're taking a look at them, AT&T, ticker T, out of the communications sector, down 10.41% on the day. Huge drop. Their earnings was today, so I'm sure that they must have had some negative earnings report, because that is a monstrous drop. Looks like they might be recovering a little bit in the after hours, but man, that's a big drop for a single day for any company. Closed the day at $17.65. Average volume 30.567 million. Today's volume was 129 million. So a lot of people saw that and jumped in. Steady sell off throughout the day, right? Market cap of 126.26 billion, beta of 0.77, so they are less volatile than the overall market. Price to earnings isn't even showing up. That's not a good sign. Earnings per share is negative. That's not a good sign. Earnings date, like I said, was today. Must have been a bad one. Forward dividend is $1.11 paid out on the year. They are a quarterly payer. We'll see that here in a minute. Dividend yield of 5.6%. So nice dividend yield. That's very high, but there's a reason, right? Some issues with the company, obviously. Excuse me. They did recently do a spinoff, so they are trying to get their debt under control. So maybe these things turn around. I am long AT&T. I do have a position here. I'll show you that here in a minute. It is a bit of a turnaround play for me, so I'm hoping for the best. But man, these numbers do not look good so far, right? And a one-year target, at least according to Yahoo Finance, of $21.22. Ex-dividend date was April 6th. So I always tell you, get into the financials of the company. One of the things I like to look at is the statistics. You can find dividend. What I go through is dividend yield theory, and to do that, I go into statistics. I go down to the bottom. You can find under dividends and splits. Their 5-year dividend yield is 7.02%, currently sitting at 5.6, right? I know it says forward, but that's current as well. 5.6%. And dividend yield theory tells you that if the current dividend yield is higher than the 5-year average, it speaks to some undervaluation. And if it is lower, it speaks to overvaluation. Now, this one is not a good one to do that with, because they recently cut their dividend yield, cut their dividend altogether. So obviously it is going to be lower than it was before with a dividend cut. So that one would not apply to this company. So not a good one to use, but it is one that I like to use over time, just to give you a quick gauge of whether a company is overvalued, undervalued, or fairly valued. Another one I like to get into is financials. You'll find their balance sheet here. You'll find their income statement. You can look to their assets to debt. You can look at their debt to equity. You can look how they're paying off their debt. They're increasing their debt, whether they're paying down, buying back shares, whether on this one I look at free cash flow, because that's what they pay the dividend out of. So you want to see growing free cash flow over time. Now, this is going to be a little wonky too, because you see 29, 27, 25. So it was always decreasing over time, it looks like a little bit. But then a big drop from 21 to 22. Again, they had a spin-off. So they took a part of the company and spun it off into another part. So that wasn't expected as well. But they are repurchasing their stock. So they are paying down their stock shares over time, right? So that is nice to see. The rest of the numbers, like I said, look pretty rough. And Another site I like to go to, stockanalysis.com. Always check out more than one site to make sure the information you are getting is accurate. And on the 36 stock analysts they've had to take a look at this, they do call it a consensus buy. I'm actually a little surprised by that. And they have a low estimate of $9.09. Wow. 48.5% decrease in the stock price if it was to hit that. That's a huge drop. I would probably buy some more at that price to bring down my cost basis. They have an average estimate of $21.55. That's pretty close to what we saw from Yahoo Finance on the previous page. That would be a 22.10% increase in the stock price. And if it happened to hit their high, $29.40, that would be a 66.57% increase. All the while, you could collect that 5.6% dividend yield, as long as they don't cut their dividend yield. Now, again, you can get a lot of the same financial information. They just present it in a different manner. One of the sites I like to go, or one of the ones I like to look at here under statistics, return on equity and return on invested capital. Now, I usually look for something along the lines of 10% or better for both of these. Obviously, you can see negative 6.9%, not good. A return on invested capital, not even listed, not good. So again, not looking good. This is probably a company overall, if I was telling someone to start investing, this is not where you would start. Do not look at the dividend yield and try to play this one. If you are a more seasoned investor and have a little bit of room in your portfolio for a speculative play, that's what this is to me. This is a bit of a speculative turnaround play for me. Plus, I like the dividend yield. I actually like that they just cut the dividend because they're less likely to cut it in the future. I bought it after they cut the dividend with the idea that, okay, it may turn around, but I'll collect the dividend along the way. I'm not looking for a bunch of appreciation in the stock price. So again, this one is not one I would recommend right now. I would wait and see if it does turn around. But hey, I'm not going to tell you what to do. If you want to jump in it, you go ahead. I am in it. Let's see that. So again, I do have 213.498 shares. I am currently down 3.23%, right? Down $438.74. My cost basis is $18.29. So I may be a buyer just to bring this down a little bit, or I may just sit and let the dividends pile up. But it is a quarterly payer. They pay out 27 cents and some fractions of a penny here. You can see here back in 2022 where they cut the dividend from 52 cents, right? So that's been steady Eddie. They haven't raised it at all. That's another thing. If they go through, I will say, if they go through another year without raising the dividend, I probably will look to trim this out of the position. Payout ratio is negative. Dividend growth is negative. That's what happens when you cut a dividend. So not good here. None of the numbers really look good. Again, I may just sit on this one and let the dividends pile up. I may throw a little bit more towards it. Maybe I'll jump it up to 250 shares to try to get this cost basis down. If it stays down here in the $17 range or lower, or if it doesn't raise the dividend at all this year, it may be one that just like with Intel, I look to get out of whenever they cut the dividend after the only thing that really bothered me about Intel is they cut the dividend after they said they were going to keep it. So that is my opinion on AT&T. I know this one is going to be a little confrontational. For some people, they're not going to like it. And I agree. The numbers do not look good. And it's not one I would recommend for someone starting a new portfolio on. Well, that is really it. I really appreciate you stopping by. Now, if you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell down below, and most importantly, hit the subscribe button. Join me on this journey to financial freedom. Hopefully, you're on your own journey as well. I do have a Webull link down below. If you don't have a brokerage account, if you use that link, open a brokerage account, put some money in, you'll get some free stocks. I'll get some free stocks. It is a way to help out the channel. Another way to help out the channel, do all that stuff like I said down below. Hit that notification bell. Join the channel by hitting that subscribe button. Join the vested interest community, trying to build a like-minded community of investors so we can share what we are doing in our portfolios and hopefully learn from each other. And drop a comment. Let me know what you think of AT&T. Is it in your portfolio? Is it one you are avoiding? I would avoid it right now personally. If it was not in my portfolio, I'd be holding off on it altogether, so I understand that. I do personally read and respond to the comments on the day I drop a video. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and there's money, so never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.